Have you ever wondered why, even though you work all day, it feels like you barely make enough to live? Why your paycheck seems to shrink before it even reaches your hands? Welcome to the world of taxes. Today I'll explain it all, clearly, simply, and with examples that actually make sense for your life. Why do we pay taxes and how do they affect us? Let's imagine Maria. She has two jobs. In the morning she works at a coffee shop, and in the afternoon she delivers food on her bike using an app. Between both jobs, she makes $2,000 a month. But when her paycheck arrives, she only gets $1,580. So what happened to the other $420? That money didn't disappear, it went to taxes. In the U.S., both federal and state governments withhold part of your paycheck to fund public services. The most common deductions are income tax, federal and state. You pay this just for earning money. The more you earn, the higher your tax percentage. Social Security. This fund helps pay retirement benefits and disability support. Medicare. Used to fund healthcare for people over 65. Local or city taxes. Some cities, like New York, charge an extra tax. This system is called a progressive tax, which means that in theory, the more you earn, the more you pay. But it's not always as fair as it sounds. Maria, earning $2,000 per month, pays around 15 to 20% in taxes. But a corporate executive earning millions might pay a lower percentage, thanks to deductions and legal tax strategies. What is sales tax? In other countries, there's something called VAT, value-added tax, applied to almost everything you buy. In the US, we have something similar, sales tax. But there are key differences. It's not included in the price. If something costs $10, you might actually pay $10.85 at checkout. It varies by state and city. Some charge more, some less. Basic products like groceries or medicine are often exempt. You buy $100 worth of groceries, but end up paying $108.50 because your city has an 8.5% sales tax. And yes, some states like Oregon or Delaware don't charge sales tax, but they usually collect more in other taxes. Being self-employed. More income, more responsibility. Now let's talk about Juan, a freelance graphic designer. He has no boss, works from home, and bills clients directly. He earns $3,000 per month. But unlike Maria, no one withholds taxes from his pay automatically. That means Juan must calculate and pay his own taxes every 3 months. Pay a special tax called self-employment tax, which covers Social Security and Medicare. Keep track of receipts and expenses to deduct from his income. Possibly hire an accountant to avoid mistakes. If he doesn't pay on time or makes a mistake on his tax return, he could face penalties or interest charges. Being self-employed gives you freedom, but also requires strong tax organization. Personal taxes versus corporate taxes. Now meet Mark, the founder of a startup that made an app for dog owners. His company made $1 million in revenue, yet he reported a loss on his tax return. How is that possible? Companies have many legal ways to reduce their taxes. Businesses can deduct certain expenses from their income to pay less tax. A company earns $1 million in sales. But it spent $300,000 on salaries, $50,000 on advertising, $20,000 on office rent. These are deductible expenses. So instead of paying taxes on $1 million, the company pays on just $630,000. The more a company can prove it's spent to run its business, the less tax it pays. Operating expenses. These are day-to-day costs to keep the business running. Examples include employee salaries, utilities, electricity, water, internet, marketing, software licenses, business travel, client meals. If the company can prove these were necessary, it can deduct them from total income. A company spends $10,000 traveling to tech expos. That can be deducted from taxable income. Depreciation, amortization. Depreciation allows a company to spread the cost of an expensive asset over time instead of declaring it all in 1 year. A company buys computers for $50,000. Instead of deducting all $50,000 in year 1, it can deduct $10,000 per year for 5 years. This helps smooth deductions over time and manage taxes better. Depreciation applies to equipment, property, software, patents, and more. Investments and paper losses. Companies can reduce taxes by showing losses in certain areas or investing in things that haven't yet made money. Investing in a new product or technology that failed, report it as a loss. If a property loses value, it's a declared loss. Investing in stocks that drop in value, they can use the loss to lower taxes. So even if they made a lot of money overall, if they can prove they lost money in certain areas, they pay less tax. They might earn a lot, but on paper, they can show no profit and pay little to no tax. Meanwhile, Juan, who earns $35,000 a year, doesn't have access to those kinds of deductions and ends up paying more, proportionally, than a big company. Where does that money go? Taxes don't disappear. They're used to build and maintain roads, fund Social Security, support public hospitals, finance public schools, pay government employees, police, firefighters, senators, etc. But many people feel like they pay a lot and get very little in return. This is called tax pressure. How much the system costs you compared to what you receive. What if I don't report my income? Some think, if I sell online or do side gigs, I just won't report it. Be careful. If you sell on platforms like eBay, Etsy, or Facebook Marketplace and make more than $600 a year, the IRS can track it. Not reporting it is tax evasion, even if you're not a criminal. Failing to report your income properly can lead to legal trouble. Can the system be better? Yes. In countries like Sweden, taxes are higher, but the services are also better: free education, universal health care, housing support. In the US, even though you pay taxes, you also have to pay for private health insurance, college, retirement plans. That's why many people feel like they work, pay, and don't see the benefits. What can you do? Learning how the system works helps you. Use legal deductions, like work expenses if you're freelance. Save money on your tax return. Avoid mistakes that could cost you. Even get refunds from the IRS. So the next time your paycheck feels smaller than expected, remember, it's not just your boss. It's the system. Understanding how taxes work doesn't just help you pay less, it helps you live better. Because while you can't avoid them, you can learn to manage them. If this video helped you understand the US tax system better, give it a like, subscribe, and share it. Everyone deserves to know where their dollars are going.